Joining us now from Chicago at the CME is Larry Levin. He's president of Trading Advantage. Larry, good to have you back on In the Loop. It is a pretty upbeat, hi, good morning. It looks pretty positive this morning. Do you think we've got a lot more room to run higher here when it comes to the equity trade?
I do. I mean, obviously, we're starting off on record highs. We're on the highs of the overnight session. The market kind of faltered back and forth until really got going early this morning, and then obviously we're up about 18 points in the S&Ps. And I do think there's more to go because I think there's just going to be more and more talk of this Fed easing. We're never tired of that talk, right? If you're a bull, you're loving that talk, and certainly that's the reason that we're up today. It's really all Fed driven. Technically speaking, obviously there's no resistance because we're at record highs. There's a little bit of support at like 1625, 1637, but that's about another 30 points below where we're trading right now. So even those numbers really aren't in play. So really you got to pin it all on the Fed.
Hey, Larry, speaking of the Fed, Julie here, do you think that the interpretation of Ben Bernanke's commentary yesterday is correct, that indeed he's just full steam ahead, the tapering talk is done, at least for now? Do you think that the market is reading that too positively?
Well, I don't think they can read it too positively because the situation is we've watched this situation for the better part of really 2.5, almost 3 years now of this monetary easing that continues to happen at $85 billion a month. It's driven the market up for the longest time, and I think investors have finally figured out that that's the deal, right? I mean, even inexperienced investors know that the Fed is the reason that the market goes up. It's certainly something that people read in headlines on the internet and newspapers, and because of that, people get it, and so they want to buy this market. If you listen to analysts yesterday after the close, everybody said be cautious tomorrow, buying the open. Well, obviously that's really not the case. People have not been cautious. I don't ever recommend buying the highs, but if you want to make money in this market, especially when the tapering talk's off the tables, you've got to buy the highs.
Now, Larry, aside from the steamroller that is the Fed and Chairman Ben Bernanke in these markets, we got to talk about what's happening elsewhere as well, because on the microeconomic side, we've got those smaller stories, the company stories. I'm referring specifically to earnings reports coming out. We got the big banks coming out tomorrow. What exactly would derail or pump this market higher besides the Fed? Can earnings season do anything on that front?
I think there could be knee-jerk reactions to the earnings when they come out at the end of each day, Dom. You called it right. The steamroller, Fed is the steamroller. But earnings certainly are something that at least traders who are watching every tick want to watch, and there's knee-jerk reactions to that. But with that being the case, I mean, there's really two sides of the economy right now, right? As far as employment's gone, it's not doing very good, right? Certainly our president and the government wants you to think it's doing good. It's not really doing that good. Corporate America, on the other hand, it really is doing well. They've done a good job of recovering from the 2008 situation, of cutting expenses, of doing things to be more profitable. And that's a good thing, and that's good for this country. But the other side of it, the employment side, is not a good thing. And so those two things weigh on each other. But unfortunately, the situation is nothing's bigger than the Fed. The Fed is what's driving everything. And so while we'll watch those on a tick-by-tick basis, the real movement's coming from the Fed.
It all comes down to the Fed once again. Larry Levin, thank you so much. Larry Levin with Trading Advantage out there in Chicago. Coming